Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Wednesday morning, middle of the week, we're coming to you from the CNBC-TV18 Motilal Oswal studios. It's a much settled, more quiet kind of day after all of the ups and downs, literally, that we've been through. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, morning.
Hi, good morning. But Prashant, no settling with the sound bites, the posts and the tweets, right? And I think much of last evening was spent around debating whether he used the F word or not.
He did.
And one of the headlines said that he's dropped the F bomb now after the bombs on the nuclear facility.
Well, that's right. You know, I don't know how we will be rating him at the end of his tenure, but he's been very entertaining. You know, every few hours you get something from him, whether he talks about Putin, whether he uses different words.
Yeah.
But what a guy.
So Nobel Peace Prize or not, but entertainer of the year or the decade?
And, you know, that I think it was a presidential first. I don't remember. You know, there are private conversations which are later revealed to be public. And maybe presidents earlier have used this, used the word, but...
Out to the media this was.
Yeah. And, you know, to me what stood out was that he was angry. He was not angry. He was angry at Israel.
Yeah.
If you sort of, it was really worked up. So we'll of course talk about this and maybe not play out with a beep. We'll play out this soundbite. But let me just quickly run you through what you need to know as we begin this session. As I said, it's a much more settled, much calmer kind of read-through as if you look at the market prices. The relief rally, in a way, has continued. And I say when the relief rally, the ceasefire, markets responded to that, and they're continuing to respond. S&P was up about 1.1. NASDAQ was up a lot more, about 1.5% higher. The CBOE volatility index was down some 12%. Down to about 17.5. Tech was a top performer, as you can see up on your screen. So names like Intel, AMD, Broadcom, Taiwan Semiconductor, they were all, the big gainers that you had last night. Now, the 10-year yield, actually the macro markets are also extremely well behaved. The 10-year yield down 5 basis points to 4.3 actually. The dollar index down another 0.5%. 97, under 98 broadly. And of course, oil prices, the reflection was there yesterday, so they're not... I mean, if you look at absolute levels, they're still at about 68, 69 odd dollars. But, I mean, that 5% fall did come through. Now, some commentary from Fed Chair Powell. And this, of course, was, as we highlighted yesterday, he would face questions with regards to why he isn't cutting rates because President Trump has been berating him that he's not. Basically what he said is that if it wasn't for upside inflation risks, policy rates might have been lower, potentially at neutral by now. And maybe we'll play out some sound bites a little later. The question is, markets took it a little dovishly, but did he say anything really new or earth-shattering in that sense? Perhaps no. So he basically said he's going to be watching, inflation through the summer quite closely, and that will help him decide whether he wants to cut rates, of course, once and then maybe twice this year. So that's the macro markets. I mean, basically the screen is looking much better. I'll just tie in the levels here. The Nifty yesterday broke above the high of 25,222, but we didn't close above it. I mean, the market actually fizzled out and closed about 1/3% higher. So that it becomes, there are two levels. There is 25,222 level, and then there is yesterday's high, which is 25,300 plus. The level which we got to and then kind of sold off. Support stands at the 20-day moving average, 24,872, and then the 40-day exponential moving average, which is 24,637. So those are the two numbers. Bank Nifty broke above the previous intermediate high of 56,328. Here, the targets are, the high of 57,050. Supports come in at the 20-day, which is 55,980. And then the 40-day exponential moving average, which is 55,210. So those are levels we need to work with. At some level, the GIFT Nifty will come up on your screen. At some level yesterday, the market was still kind of toying with the idea whether the ceasefire will hold, whether it will start again, and et cetera, et cetera, et cetera. it was, as we put out yesterday, it was pretty clear that most likely it's going to hold. I mean, announcing a ceasefire and then towards the fag end, as you see some strikes, etc. I mean, that's basically just, we saw that during Operation Sindoor, the ceasefire, etc. as well. So that's held. So maybe at the margin, the full impact of really believing that the peace for now perhaps holds shows through in the next couple of days. 100 points higher on the GIFT Nifty is what you have right now, 25,181. Surabhi.
Absolutely. So actually, before I talk about Asia, I just want to focus on now that testimony that the Fed chair was giving yesterday, because it was really interesting, Prashant.
Yeah.
And I just want to add one quote to what you said. It is very, very clear that he's standing resolute when it comes to cutting those rates. And he's saying we aren't commenting on tariffs. Our job is keeping inflation under control. And when policies have short and medium-term meaningful implications, then inflation becomes our jobs. It's a very definitive statement going out there. And he says that all professional forecasters I know of expect a meaningful increase in inflation over the course of the year. So in that testimony, he was being just sort of strong and resolute, giving an indication that my job is to make sure that inflation doesn't go beyond permissible limits. So that was the Fed chair, and markets have been taking note of that. Now, Asia this morning is actually feeling very, very good all over again. Some of the markets were slightly mixed, for instance, Australia, but even there, now we're seeing green. Hong Kong, Taiwan, look at the main markets like Japan, gains between 0.25% to almost 1% now on some of the indices. So once again, Asia is looking good. On oil, the commodity slumped to as low as 67.20 there, 67.20.21 thereabouts yesterday. From there, this morning, there's a slight recovery, but nonetheless, I mean, the oil market has seen that geopolitical risk premium go off very, very quickly and dramatically. Yesterday, I mean, what added to the sentiment was another post from Mr. Trump. He said that now Iran can keep supplying oil to the Chinese. Not that, his permission was needed perhaps for this, but it just added to the market sense that this is okay. I mean, the strait is fine and oil can flow. He says China can now continue to purchase oil from Iran. Hopefully, they'll purchase plenty from the U.S., and it would be my great honor to make this happen, so on and so forth. So oil markets are all right. They've come back to normal zones before the conflict. Now, for us, the issue is the global backdrop has been very supportive, and that was the case yesterday as well. But for us, the Nifty is unable to take out the top end of the range. Maybe it's a question of when and not if. But we're running into resistance around this 25,200 mark, and we saw that yesterday as well, where the Nifty fizzled out. Mid-caps are still doing quite well, as we saw yesterday. Yesterday, the fund flow situation was a problem for the market. There was a lot of FII selling, which is why the Nifty finally cooled off. They sold off cash market stocks worth over 5,200 crores. There was almost an equal amount of buying from DIIs. But again, the market has to deal with this FPI selling. And of course, the blocks are also going through. So let's watch for this. In terms of individual newsmakers, I'll keep an eye out on Vodafone Idea, because yesterday there were some headlines of if there's some form of another government reprieve coming in, maybe deferring the timelines for interest or AGR payouts. The company has now made a statement saying that we have not received any communication from the government on relief, but it continues to be, of course, a watch point. So we will look out for Vodafone Idea. Nigel.
Well, yesterday, actually, though we ended in the green, it will go down. It's a bit of a disappointing trading session because we had the ingredients to go ahead and, in fact, build on to those gains. However, there was some uncertainty, as you all mentioned, with regard to the ceasefire, which appears now that, in fact, is the worst-case scenario is not going to play out. In fact, the best-case scenario is playing out because the ceasefire, has come into play. And the troika overnight, well, that's favorable. If you look at the yields, you look at the dollar index, look at Brent crude prices as well. All of them in favor of an emerging market like India. But since we're getting into an expiry day, we'll keep an eye out on the rollover pictures as well. And both on the Nifty as well as on the Nifty Bank, the rollovers were a little higher. On the Nifty, more or less in line with the past few series average on D-2. That's 2 days before the expiry. While the Nifty Bank was a wee bit higher, if you take a look at what the rollovers right now in comparison to the averages. What about the action coming in from the FIs? They not just sold in the cash market, but they added some shorts as well. And they added close to 10,000 short contracts. That's in the ratio of 3 shorts for 1 long contract. And now their short positioning is holding at around 77%. In absolute terms as well, as it was elevated at around 1 lakh contracts. Now the FI net short positions have moved to around 1.1 lakh contracts on the short side, while the clients, well, they are holding on to their long positions. And this is a combination normally that is worked out in favor of the bulls. So that's the hope. You have some shorts in the system And the good news is hopefully likely to continue with regard to peace globally, and geopolitical tensions have cooled off. So these short positions of around 1.1 lakh contracts, they'll hold in good stead. However, on the option side, there is aggressive call writing that we've seen. And in yesterday's trading session, there were 2 calls that were written for every 1 put. And what were the calls that were written? Well, the 25,200 call, that saw a big open interest build up. You saw the 25,100 call as well. So the bears believe, at least in the near term, they have got the higher levels covered. And maybe with good reason, right? Because the last few times we have gone to around that 25,130 to around 25,320. That's been resisted. It's been met with resistance. And all of this in the last few trading sessions itself. But because of the aggressive call writing that we have seen, the PCR has cooled off from around 1.1 just a few trading sessions ago to around 0.85. But let's get the next plate up for you. We've been running into resistance at around this 25,130 to around 25,320 odd. So that becomes the resistance zone. For today's trading session, what are the levels you're looking at? The 20 DMA, you don't want it to get violated on the downside, both on the Nifty as well as the Nifty Bank. And that 25,300 continues to remain a resistance. Even on the Nifty Bank, well, that 20 DMA becomes important, which comes in at around, that 55,980 approximately, while we could very well be on our way to fresh all-time highs, at least on the Nifty Bank. So keep an eye out on that. Stocks that I'm looking at, a couple of stocks have come out of the F&O ban, so they'll be in focus, notably RBL Bank as well as Biocon. Let's see whether or not the bulls can build on to this 100-point gap up that the GIFT Nifty is suggesting.
All right, well, we'll see what happens as markets open. There's still about 15 minutes to go for the pre-open session. Now, as we told you, Fed Chair Powell giving his testimony yesterday, so just want to play out a few sound bites. Listen in.
Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. We are attentive to the risks on both sides of our dual mandate. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. What will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain. So I would just say what that means at this moment in time is that a significant majority of the committee, but also there's a pretty significant minority that doesn't agree, but a significant majority feels it will be appropriate to reduce rates later this year. And what that means is that each of those persons who wrote down a cut in rates later this year, they think that there's some state of the world where inflation doesn't prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty.
Okay, well, let's welcome in Vikash Prasad. He's a portfolio manager, Asian equities at MNG Investments. Vikash, great to have you with us here. Good morning, Prashant this side. Just a quick sense on those sound bites. Did we hear anything new? He was not going to say anything, how do I put it? He's not going to respond to anything political in that sense, with all the berating he's received from President Trump. And he kind of sort of stayed the path. He said, well, no rush to cut rates. We'll watch inflation closely. I mean, the same things any Fed chair will say. What did he make of it?
Good morning. It's wonderful to be back after so many years. I would say that I didn't hear anything new. It remains a tricky balance. But given our focus on Asia, what is encouraging is what we see on the ground here. And while the path of the US economy will always be important to the rest of the world, there are a lot of things here in the region, in India, in China, in Japan, that we see that make these countries and economies and markets more independent than they used to be. We're very constructive on Asia broadly. We might have been a little bit early a couple of years ago to assume that the divergence between the US and the rest of the world would converge at some point, led by Asia. But we're seeing that happened now, and we figured that will continue.
Vikas, hi, good to have you on the show this morning. So within Asia, what we've seen, at least in the last 4-5 months, is that as money has started shifting or rotating from the US to an extent, it's gone to Europe. In Asia, I guess it's going to South Korea, maybe to China, I don't know. But India has not really got its share of the steady foreign flows in a while. What do you make of it? Do you see that changing?
Well, I would say broadly first, the markets in Asia have been remarkably resilient this year. If you go back to the sell-off, if we start in India, the sell-off that we saw in small and mid-cap names in January, February, the volatility we saw around that Saturday when the budget was announced, and then we've had Liberation Day, armed conflict around the world, markets have been very resilient. And India led the way back post-Liberation Day. It was the first market to recover its losses post the first week of April. So I would say that India has been very resilient. I am glad that you mentioned South Korea because it's something that we've been thinking about. We will know soon about the developed market status of South Korea. If that happens, I don't see that is.
It's not happened because I'm happy to fill you in on this. Our colleagues were tracking this very closely. And no, they remain a developing market. They're not moving to developed categories. So we don't have any reason to rejoice, at least as of now, from an Indian perspective. Yeah.
Right. So maybe next year. But given the recovery that we've seen in South Korea, given the volatility we see around the tech industry still in Taiwan and in South Korea, some of those fund flows should make their way back to India, given the strength of the domestic story. One stat I share is that less than 60% of the S&P 500 revenues are from within the US, whereas you have almost 75% of NSE 200 revenues coming from within India. And that number is only going higher. So this is a very domestic story. It's why this is an appealing story for long-term investors and for active managers alike.
Hi, Vikas. Good to see you in. Nigel on this side. You've mentioned that you've allocated a little bit more to India, and you're saying that India is a long-term opportunity. Though there are a couple of pockets which are expensive, tech and consumer staples, but there are still opportunities. Tell us, with regard to the Indian markets, where are those opportunities you're finding?
But even though staples broadly and IT companies broadly have underperformed over the past few quarters, that does not make them inexpensive. That does not make them appealing for us. We remain more underweight these two sectors than we have been in many years. We still think that they're expensive given the earnings outlook. And we're not zero weight or underweight every name in these two sectors. And we own some off-benchmark exposure in both sectors also. But the earnings outlook is challenging. So not only in an absolute sense are they less appealing than they used to be, in a relative sense, relative to other opportunities, which we like, we have allocated less capital to those two sectors. So what we do like healthcare services, whether it's CDMOs, diagnostics, hospitals, travel-related companies, hotels, airlines, OTAs. We like auto parts. That to us is an underappreciated sector of the economy, we think. There's a lot of noise around the headlines around tariffs and OEMs. But when you start looking into the quality of businesses that are listed in India in the auto parts space, we like those as well. High-end real estate, we like as well. So there's a lot to like. NBFCs has been a key overweight for us this year. We've reduced some exposure in about the last couple of weeks. Same with defense this week. Finally reduced some exposure after adding to it in February. But we remain overweight that sector as well.
Okay. Got that. Vikas, thanks very much for your thoughts and for your time today. Good talking to you, and hopefully we can do this more often in the weeks and months ahead. Thanks very much for being with us. Well, with that, let's quickly tell you what are the other interactions that are lined up on the show today. Coming up at 8:35, we have the management of Tata Motors joining in to talk about the rare earth magnet crisis, their growth trajectory, and plans going forward. At 9 o'clock, we discuss the telecom space. Balaji Subramaniam of IIFL Capital Services joins in. There's still that debate around Vodafone Idea, whether we'll have a three-player market or not. At 9:20 a.m., Sandeep Bhatia of Macquarie Capital will be our market master of the day. At 9:30, we have the management joining in of HDB Financial Services. They're all set to hit the street with their IPO. So Mr. G. Ramesh and Jaykumar Shah join in with some thoughts as that issue opens. After that, Harsh Baveja of REC chats with us to talk about the impact of the RBI norms when it comes to project financing. At around 9:50, SB Mohanty of Indian Rare Earths Limited talks about the impact of the rare earth crisis and how India can cope. Are we prepared to increase our own production? By the end of the show, we get chatting with S&P Global Ratings to talk about Indian macros and the growth outlook going forward.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track in our special Top 10 segment. For the time being, we're giving you a sneak peek into the list. Hindalco, PTC Industries, Bazaar Projects, RITES, Asian Paints. All of them will be reacting to positive news flow overnight, while we have IOC and BPCL as well that will continue to react to the drop we've seen in crude oil prices. On the flip side, Sun Pharma and Timex will be reacting to negative news flow.
Welcome back. We're looking at cues across Asia, which are actually once again very, very supportive because most of the markets have chosen to go on the green side. Gains are between 0.5% to almost 1% on some of them. Let's pull up the implied open because that was the issue yesterday. We started with such a flourish, but then pretty much ended with a whimper. Again, today the implied open is saying we'll start 100 points higher. The critical question is, can the Nifty finally punch above that congestion zone, the top side of the range, which is around 25,200. Well, we'll find out soon enough, but we also have to look at a lot of the interesting stocks that are in focus today. And our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Let me start first with Ekta. Ekta, good morning. What's the news on Sun Pharma?
Well, yes, interesting news on Sun Pharma because they have a European biotech company that they've partnered with for an investigational therapy with regards to, skin cancers as well as non-cancerous skin tumors. And the therapy is called Nidlegy. Now, basically, the partnership is for Europe, New Zealand and Australia. Now, what has taken place is that Philogen has voluntarily withdrawn its marketing authorization application for this particular drug from the European Medicines Agency. Now, this particular MAA or authorization application was submitted in June 2024. The withdrawal, according to the company, is due to delays in availability of chemistry, manufacturing and controls and requirement of additional clinical data, and it could not be completed within EMA's review time frame, which is the European Medicine Agency's review time frame. Philogen, however, intends to resubmit the data on an updated application. So as of now, this is a little bit of a setback for Sun Pharma, considering that they had partnered with this particular company for this particular drug for Europe, New Zealand and Australia.
Okay, all right, Ekta, thanks a lot for that. Well, I'm looking at Hindalco as a mild positive that's come overnight because they've gone ahead and they have, announced an acquisition. So they'll be acquiring Aluchem company, which is in fact a company that is in the United States that's primarily into specialty alumina and alumina products. They've hinted about this in the past that they want to get into specialty alumina as well. And this appears like a step in the right direction, directionally positive. They say that the move is strategic in nature and it's primarily to expand the company's downstream portfolio. So perfectly in line with what they have stated. How do the valuations stack up? Well, the total capacity is around 60,000 tons per annum. The revenue that they did last year was close to around $66 million. And the EV they're paying is around $120 million. So they've done this acquisition at an EV upon sales of close to around 2 times. And back of an envelope calculation suggests that on an EV upon EBITDA, it's done at around 8 times, assuming that they do roughly around 20% of margins out there. So going with green on Hindalco because this is directionally positive for the company. But let's go back to Vinny. She's here to tell us about some stocks that she's tracking, which are in the news. Vinny.
Hi, good morning, Nigel. So starting with Timex India, now the promoter group Timex Group Luxury Watches BV is selling around 15% stake in the company over the next 2 days, 25th and 26th is what we're watching out for. And obviously the floor price for the issue is at 175 rupees. Now, if you see yesterday's closing price, that is at a discount of the floor price is at a discount of 35% to yesterday's closing price. And because of this, we could see some bit of a red coming in for the stock today. PTC Industries, the company's arm, has signed an MOU with Safran Aircraft Engines, and this MOU is for manufacturing components and materials for military aircraft engines. So an important update coming in here, and PTC Industries green is what we could see. Bajal projects one more important order win actually coming in for the company. Just a few days back, there was that order they got of around 400 crores in that range. Now, this is a 100 to 200 crore EPC order. This is for substations in India. So that is why Bajal projects, again, we could see some bit of a green here. And lastly, RITES also an order win coming in here for 29 crores approximately from the Gujarat Urban Development Company, and this could also see green here.
Okay, all right, Vinny, thanks very much for that. So keep an eye out on those stocks as we open up for trade. Well, let's talk about commodities. Manisha is here, and I think she's got oil on her mind once again for obvious reasons. Staying around 68, well behaved. Manisha, morning.
Morning, Prashant. Thank you for that. Well, yes, after those very, very sharp losses that we've seen in the overnight markets, Asia seems to be trading positive right now. So we are holding around $68 a barrel. Remember, overnight we've seen 5% of a decline in crude oil prices. And for this week, we are down by 11%. Well, investors are weighing on the durability of the Iran-Israel ceasefire. And the other thing is about the reports which suggest that the U.S. strikes on 3 Iran nuclear sites have only delayed nuclear program by a few months. So those developments perhaps would continue to move crude prices either ways. Apart from that, the decline in the U.S. crude inventories for a fourth straight week also seems to be supporting markets. The expected decline was 1 million barrels. You've seen 4.5 million barrels of a decline. So that seems to be supportive. What's capping gains, though, of course, is whatever ceasefire that we are looking at, and IEA maintaining that they have 1.2 billion barrels of an emergency reserve, if need be, can be deployed into the market. So that would continue to cap gains here. But for this week, we are headed for a very, very sharp decline.
Okay, dramatic week for oil markets for sure, Manisha. Thank you so much for the latest. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow are Hindalco, PTC Industries, Bajal Projects, RITES, Asian Paints, IOC and BPCL. Stocks with negative news flow would be Sun Pharma, Timex Group India and ONGC. We'll take a quick break, come back on the other side, and we'll have Devin Choksi of DR Choksi FinServ joining in for some fundamental ideas. Welcome back. So, we'll get to the fundamental ideas with Devin in just a bit. But let's now get you the latest on the rare earth issue. Tata Motors has told CNBC-TV18 that the company is expecting the rare earth magnet stocks to run out in a few months. The company also says it's looking for alternatives in the medium to short term, but not expecting any production crisis per se. Parikshit caught up with the managing director of the company and began by asking him about this whole matter.
As far as Tata Motors is concerned, I think we are good for the next few months. But beyond that, the stocks will run away definitely. We are quite hopeful with the intervention of the Ministry of Commerce. Also, SIAM and ACMA both are coordinating with the government bodies, and there's a reach out to the ambassador in China also. So I think all these efforts, we are hoping that should yield results, and we get some solution. And for mid to long term, we would definitely look for alternatives. But in short term, definitely this issue will be crucial and will have to be resolved.
Are you at Tata Motors taking production cuts, adjustments to the production cycles of certain models?
No, as I said that, for next few months, we don't have an issue, and therefore there is no need for us to take any production cut yet.
Right. And finally, before we move on to the other issues, would Tata Motors be interested in a scheme for manufacturing rare earth magnets in India? Would you like to get into this space in any way, considering it's so critical for the industry?
Frankly, we have really not given a thought to it. And therefore, it would be not a well-considered answer that I can give at this stage. I have no response to this right now.
Okay.
There's no plan.
Okay. Now, coming to the issue of pricing, do you expect some price hikes in the coming months? What would be the kind of cost pressures that you are facing right now?
Definitely there is, after 2 years of very supportive environment on the commodity side, where we did not see significant escalations because of, the safeguard duties on the steel side and some of the other commodities, there is definitely a cost pressure which is building up also on the forex side. Therefore, there is an adverse situation on the cost side. As far as price increase is concerned, we have not evaluated it it is in the review phase in the coming months. Basis the review and what we are able to absorb in terms of the cost reduction efforts that are going on within the company, given the current demand situation, we'll take a call. But right now, I have no information to share whether we are going to take any price increase or not.
Right. Your outlook on the market sentiment right now, especially rural versus urban, how they are contributing to your sales?
Rural is definitely, for the last financial year also, it was stronger than the urban markets. This year also, given a very good outlook for the monsoon, we are quite hopeful of rural continuing to thrive. Urban centers have definitely shown lower sentiment, consumer sentiment. So we'll have to see how the year pans out. RBI also has taken certain set of actions on the interest rate. It takes time till it reaches at the retail level, and then it goes through the phase of awareness for the consumers. So there are certain tailwinds definitely, but right now, as we speak, the trend that we see in the first few months is quite muted and in line with what the industry experts have been projecting, a sub 5% kind of a growth.
Right, 5%. In terms of electric vehicles, how's been the offtake in this quarter so far? And in terms of total sales, the reason why I ask you is that have you changed your outlook, your sales targets for electric vehicles in light of the rare earth crisis? Sir, if I were to ask you for the full fiscal year?
See, as from a demand perspective, with all the launch activities and all the, interest and excitement in the market is high. How the rare earth, will impact is too early to, comment, because as I said that there are ongoing discussions, and if it gets resolved, there should be no impact at all. Next, few months, as I already mentioned, that we have inventories to back us. And there is a hope that things will get resolved. So there is no change in outlook that we have considered at this stage.
No change in outlook. And could you give us a sense of the demand and monthly sales targets, or the kind of numbers or percentage growth on a monthly basis that you're looking at in the EV segment?
I don't want to share any growth numbers. That's very internal to us. As far as industry is concerned, definitely we'll see double-digit growth on the electric vehicle side, as I said, because there has been multitude of launches by multiple players. And we have seen the response of the market to that in the last 5-6 months. It should only at least remain the same or grow stronger in the coming months. So therefore, from a demand perspective, I don't think there's any issue.
Right. Harrier EV was the big launch of the year. What more can customers expect in terms of portfolio expansion, new launches in the fiscal?
In this fiscal, we have already said that we launched 2 new products in the high EV segment, which is above 20 lakh, which is Harrier EV and Sierra EV. Both will be launched in this financial year. Harrier EV has already been launched. Hopefully, the deliveries will start from next month. And Sierra EV comes in the second half of this financial year. So 2 big launches, and we are clearly seeing that in this greater than 20 lakh segment, the response of the customers has been very encouraging.
Okay, all right. Well, let's get in a view coming in from Deven Choksi, MD at DR Choksi FinServ, who joins us on the show. Hi, Deven. Good morning. Good to see you in as always. You heard that conversation that Tata Motors had with Parikshit. What's your view on TAMO? And also, where does it come in your preference? Or do you like something else in the auto space?
Good morning, Nigel. Well, I think the company's commentary is remaining quite subdued and they are circumspect about various things. In my viewpoint, I think they're probably counting the worst at this point of time. Whereas I think the other side of the story emerging, I think, very strong. We have seen a significantly good amount of jump in the commercial vehicle segment, and I think that's been echoed by even the peers in the industry. I think that's what is important to understand. On the other side, I think the demerger of both these companies taking place in passenger vehicle and the commercial vehicle segment, two separate models, which means I think the company will have better ability to handle even the subjects like cost pressures. I think which probably I think management is refraining from talking it out at this point of time, justifiably maybe. But in my viewpoint, I think whatever the worst that we are talking about is already being seen in the price. And I think the opportunity out here in the current financial year, one, with the higher amount of disposable income in the hands of people, the discretionary consumption is going to increase and auto ancillaries would definitely be the beneficiary out of it. JLR portfolios bringing up the new models, and I think that's where probably with some kind of road bump, I think in this case, but still I think they have got the opportunity to export to other parts of the world. And in my viewpoint, I think overall picture as we progress during the course of the year should be emerging a little bit more clearer for Tata Motors. At this point of time, we hold, and I think we would like to buy in a current situation if the market gives opportunity.
Okay, that's a call on Tata Motors. Devan, hi, good morning. Good to have you on. We usually talk about all the secondary market action, but I must ask you about the primary market action as well, because it's a big day. HDB Financial Services finally is going to be going out to investors. I mean, they're out there, issues opening up. Of course, the bulk of it is an OFS. There only, I think, about 2,500 crores comes into the company. But how do you find it? Pedigree is fine, but valuations, business growth potential. If someone is looking at owning an NBFC, should they consider this in the issue at all?
Yes, Sylvie. Good morning. In my viewpoint, I think yes, one should. Rightly rate, I think the good promoter, good pedigree, remains subdued largely because I think operated under the umbrella of the bank for good many years. Now they're getting a chance to, I think, play their own game with the individual segment of customers, the retail segment of customers. They have the SME, MSME segment of customers as well. So those products, I think, which they exclusively cater to, I think they have a reach, and that is what is more important. With a 1 lakh crore plus kind of a year, I think they already established the reach in various parts of the country, and that's more important. They have lagged behind in adapting to the technology, which the likes of Bajaj Finance have done remarkably well. I think another scope, probably I think once you're out of the shelter of the bank, probably you can do it, I think, far better as I see it in this kind of a situation. Overall, I think remain positive. Valuation-wise, not so expensive. So certainly, I think with this particular OFS plus public issue, which we are experiencing, I say is a good opportunity to buy this NBFC as well. As I see it, as the scenario unfolding, Bajaj Finance, Geofin, HDB, and likes of Poonawalla, 3 or 4 main NBFC companies could possibly be, I think, one, I think, which is going to be in the portfolio of the customer. So one would remain bullish about the prospects moving forward.
Okay, so that sounds like a positive thumbs up for HDB Financial Services. By the way, just a reminder, we'll be speaking with the management as well at around 9:30. We'll try and get some more perspective on how they're looking at their business and their growth plans. Deven, another pocket of the market that seems to be getting a lot of attention now is the whole consumer space. And the increasing chatter that at least we hear is that, should start looking at consumer stocks. They've underperformed. And as disposable incomes rise with the income tax cut, maybe this part of the market can revive again. First of all, do you agree with that thesis? And if yes, then what part of consumer would you play? It's very big. There's staples, there are your food companies, food delivery platform companies, there are retailers like Trent. How do you look at it?
We will deny of the fact that more disposable income in hands of consumer and higher amount of spending from current year onwards we are going to be experiencing because of the tax saving in the hands of the individuals. So that is definitely for sure. At the same time, with the interest rate falling, the EMI component becoming more affordable, I think the discretionary part of the consumption could possibly be seen as, I think, a better growth orientation in the environment hereafter. So I think whether you call it, I think money going in this space, like buying the houses or buying the autos and some other stuff, I think it is going to be a reality in current year, and we'll be seeing higher growth coming in. At this point of time, I think the proxy to participate in this growth, I think, would be financial companies, the NBFCs, in my viewpoint, wherein I think the higher amount of credit growth is being taking place due to, I think, this kind of a situation. And in my viewpoint, I think if you are going to clock around 20-25% kind of a CAGR growth in the lending due to the surge in the consumption, maybe I think they are not bad opportunity at all. And fortunately, they are not so expensive compared to the pure consumer company, I think, which are expensive on the valuation. So one will play a little safe, buy, I think, safety first, and then possibly take some amount of extra risk at such point of time.
Okay, all right. So that's a take on consumer. They were in oil prices, the other big headline, right? I mean, up $10, $15, then down $10, $15. From a stock perspective, the listed stock perspective, the stocks have been very volatile. Yesterday, obviously, ONGC fell because of the sentiment. But do you like anything, any buys, whether upstream or the downstream refiners like IOC, BPCL, HPCL?
So I think one indication we get from most of the crude oil derivative consumers, which is most of the chemical companies, specialty chemical companies included, they are talking about buying the derivatives at a significantly, I think, lower cost compared to what they've been buying up till now in last 2-3 years. So from that point of view, I think they are basically talking about increasing the margin. In a way, I think it is interpreted as increasing the margin. On the other side, the specialty chemicals per se are commanding better prices in the premium because of the demand situation in the global market for whatever other reasons that we are talking about. In my viewpoint, on one side, the cost remaining lower, other side, the demand situation improving, margin getting increased due to the delta factor, as well as, I think, higher amount of volume growth that you are going to see. Definitely good sign for some of these companies which are into the, and we definitely like, I think, the companies which are in the specialty chemical segment, be it in the application like pharma or agrochemicals. I think the business environment looks quite conducive for growth.
Okay. Just checking markets across Asia once again to see what's the texture and the color. Actually, markets beyond Hong Kong are quietly or moderately positive. That's what you have. It's actually the Hong Kong market, Taiwan and Hong Kong, which are leading in terms of the gains this morning. That's what we have, at least for the time being. Okay. We have some statements also coming in from the Chinese Premier, Li Kang, who's been speaking at an international conference saying that trade should not be turned into a political or a security issue. Just some commentary coming in from Chinese leadership this morning. Okay, Devin, otherwise, overall market advice, I mean, the broader market has been doing very well. The index is getting stuck at around 25,200, but broader market is alive and kicking. Any new ideas that your team has come up with? Obviously, all investment, long-term fundamental calls. Anything interesting?
We continue to like, I think, some of the companies. I was talking about, I think, prospects for the housing finance because of the growth in the spending and higher amount of buying of the houses as well, which is witnessed in the real estate companies' commentaries as well. So companies like Bajaj Housing Finance, those slightly premium quoted, but definitely, I think, a different game plan for execution. We find, I think, those kind of opportunities from long-term perspective remain extremely appealing, extremely convincing opportunities. So, yes, definitely, I think they are not participating in the momentum at this point of time because of their high valuation at which they are quoting. But that's where probably investors get a chance to buy the SIP way of investment in their portfolio, accumulate such kind of stocks for a longer period of time and stay invested. That's where I think you get money. I think so. We are selectively looking at such kind of quality ideas. Similarly, I think in the engineering R&D space, which we also talked about in past, companies like Tata Technology, they remain relatively, I think, a good stock. I think from the point of view of seeing how the growth is being unfolded for them. As we see, they're sitting on prospects of around 120, 130 billion USD total addressable market for the segment in which they are operating, or part of the segment in which they are operating. Even if they end up cornering a small percentage of minority stake in this particular market share in the global space, with likes of BMW kind of tire, I think this company holds a long-term potential for very, very high growth. So again, I think systematically adding it into a portfolio for a longer period of time and sit tight with your investment kind of an approach could possibly be the more better approach in this environment for such kind of companies.
Okay, all right. Deven, Hindalco's gone ahead and made a small acquisition, very, very small, 125 million USD, which is that, it's roughly around 2 times sales. And if you look at it on an EV upon a beta basis, it's around 8 times. Very, very small for them, but it's a step in the right direction. What do you make of the stock, or do you prefer something like a Vedanta that has a special situation that's playing out? From the metals pack, what do you like?
So in general, I think the metal remains extremely convincing story for me. I think both ferrous and non-ferrous, both of them are sitting on a very, very high demand prospects at current level. At the same time, the main input cost, the energy cost, is remaining low for them, which is a good sign because the margins would possibly be speaking very well in subsequent period of time. So I think we are relatively bullish at this point of time on the prospects of metals going forward. The white metals, we like zinc more at this point of time, and of course silver, which is the mainstay of Hindustan Zinc. So we find that I think there the value proposition is significantly more convincing. And given the kind of expansion that they want to carry out, I think it's a 3-year or 4-year roadmap also, which becomes very, very clear. So yeah, selectively, I think the companies like Hindustan Zinc or Vedanta, because of the, you mentioned about the special situation of demerger, I think those companies are looking really to be more safe. Even like Tata Steel kind of company, which is correct on the price, looks, I think, quite an interesting proposition from current levels.
Okay. All right. Deven, good conversation this morning. Thank you so much for taking out the time and being with us. For the timing, we have to take a quick break. We'll come back on the other side, and the technical setup of the market, Sudarshan Sukhani and Mitesh Thakkar will join in.
Okay, welcome back. There's 7 minutes to go for the pre-open session to kick off. There is a news right as we come back out of the break. L&T Technologies has received a $50 million plus order from a global energy major into the sustainability segment. That is the sort of news flash which is coming through. We'll try and get in touch with the company and get exacts. But Sudarshan and Mitesh are with us with what they likely to do as far as trade this morning is concerned. Yesterday there was a little bit of hesitation from the highs. The market ending about 1/3% higher. This morning, is it going to be firmer and steadier? Gentlemen, morning. Mitesh, you take it first. Indices.
Good morning, Prashant. I think yesterday also, what happened was that we kind of made a fresh high, but then the expansion didn't happen on the follow-through side. So it's a very, unclear kind of a movement. But what is important is that on the downside, 24,950, 900 remains the base. And declines should be used to buy. And on the upside, I'm not sure because I think the levels have been, continuously being violated without any kind of follow through. So I think on the upside, we'll keep 25,300 as the range or the level to watch on the upside. And that's where you want to take profits.
Okay, got it. All right. Sudarshan, what about you?
Yeah, good morning. Well, it's a better day today. Yesterday, I had suggested do not trade. Wait for a 200-point decline from the open, and it may not come. If it comes, then only you buy. As luck would have it, it did come about a 200-point decline. Today is a much better day to trade. I think the markets should hold steady. Now, we may get a small intraday decline. If we get that, and if you do not have any positions, go long there. Otherwise, wait for the first 15-20 minutes and go long at whatever price is available after that. I would expect the markets to give a decent rally. If not today, then tomorrow. So today is a day to be long.
Today is a day to be long. Let's talk about individual names. Sudarshan, you go first. What's on your radar?
Well, it's HDFC Life, buy with a stop under 763. Hind Petro, buying is suggested with a stop under 397. Ambuja Cement, where we can buy with stop under 545. And finally, Geo Finance, where you can buy with a stop under 295. It's an across-the-board buying opportunity.
Okay, all right. So we've got Sudarshan's picks out of the way. Mitesh, coming across to you. What do you have on your radar?
I have all my calls for the time being. Chambal Fertilizers, after a big decline, is doing some base building, so this could reverse on the upside. Buy here with a stop at 556 for a target of 577. Delivery is a buy with a stop at 370 for targets of 393. A buy on Hindalco with a disclaimer that we have some futures positions, so there's vested interest, but this looks like heading towards 685, 690 zones, and buy here with a stop at 661. And a buy on BHL with a stop at 255 for targets of 270.
Okay, got that, Mitesh. Sudarshan, let's talk about stocks. Just in particular, wanted to get your take specifically on Reliance. If there are any immediate levels to watch over here, you see?
Well, I can't give levels, but I can suggest that every dip or consolidation in Reliance is a buying opportunity. That is for positional traders, not for intraday traders. But if you get a chance, a minor dip, go long in Reliance. A very decent rally should be coming.
Okay. All right, gentlemen, got that. Thank you very much for the trading setup. By the way, that's an important story at the bottom of your screen. Sources seem to be indicating that this co-location matter that's been ongoing for years could be settled by the NSE with the market regulator SEBI. It could be a large settlement going well over 1,000 crores. Largest ever settlement.
If it is accepted.
That SEBI would have done with any regulated entity.
Yeah.
So over 1,000 crores, and if indeed all goes through, if it is settled, then does it finally pave the way for that NSE IPO? So big story, and I think we'll have Yash on it soon enough. Take a quick break, come back on the other side, and we'll have the pre-open rates. Also, we'll be in conversation with Balaji Subramaniam. We'll talk about the telecom sector and the latest, of course, with respect to Vodafone Idea.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, let's turn our attention to the telecom space and let's discuss, how trends are likely to pan out. But before that, let's play out a soundbite we got from Communications Minister Jyoti Aditya Scindia, who bats for more competition in the telecom sector. Let's hear that out, and then we'll get an expert opinion.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough, we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
Okay, that's the minister. Can we read between the lines? Should we read between the lines? Are there implications for more than 2 players, the third weaker player? Balaji Subramanian is with us, Vice President at IIFL Capital Services. So I'm not going to do the reading between the lines. I'll ask Balaji to help us with that. Balaji, what do you make of it?
Good morning. Thanks for having me on the show. I think this kind of reiterates the government's intent to have a 3 private player plus 1 PSU in the market. So there has been a lot of twists and turns as far as Vodafone Idea's fortunes are concerned during this year. So they did the dues conversion into equity to the tune of 37,000 crores sometime in late March. And then, there was this chatter that the government has done enough, and it also kind of coincided with the Supreme Court rejecting the review petition by the telcos. So again, there was a concern that we could be headed back to those days when there were these fears of a duopoly. But now I think there were a few media reports that a couple of days back talked about more options in front of the government, which could be like extending the payment timeline on the AGR dues, converting the compound interest into simple interest, and so on and so forth. So I think again the spotlight is back on the government kind of showing its support behind having a third player. Now, the Supreme Court verdict also provides some leeway to the government to kind of work out a number of options that have been discussed. So I think that is the key monitorable going forward, because as things stand today, Vodafone Idea has to make about 16,500 crores of AGR payments by 31st March 2026. And for that, that is pretty high. And it will internal accruals will be insufficient to make those payments. And unless there is clarity in terms of more government support coming in, debt raising will be a tough ask. So I think the first step would be, ideally should be some kind of a relief measure in terms of either quantum of the liability or in terms of extension of the payment timelines.
All right. Hi, Balaji. Good morning. Good to hear your thoughts as always. The first payment you said is how much by 2026?
That is around 16,500 crores.
16,500 crores. All right. And they will, what are you penciling in though? The minister, we heard what he had to say. Do you think that Vodafone, are you factoring in a three-player market or more than that in your estimates?
See, my estimates or, my view is that Vodafone Idea will remain a third player. Of course, what market share they hold on to will also be contingent on how quickly they raise funds and, how quickly they plug their subscriber loss. Even today, they are losing subscribers, even though the loss rate has come down from where it used to be about 6 to 9 months back. So my base case is that we will have a three-player market, and Vodafone Idea, will survive as the third player. But I don't see it thriving meaningfully because, again, there are challenges in terms of their spectrum debt burden. AGR will only address a part of their problems, while the spectrum debt is the larger one. And there, at least I don't see an easy way out other than giving them a fairly benevolent payment timeline.
So, but, if they survive, then it'll be good, from a customer perspective. But from a shareholder perspective, at around 6 rupees 80 paise, what is your rating you have on the stock and view on it?
See, I have a reduced rating on the stock. That is simply because of the fact that even if we were to assume, some of these relief measures coming in, I don't know in what form and shape they will come. But considering the heavy, payouts that they face, even on the spectrum side. So on one side, their ability to invest in network will be compromised. And let us not forget that both Jio and Bharti Airtel are, significantly ahead in terms of their 4G coverage, 5G coverage, capacity, etc. And they are also continuing to invest in their networks, even though their peak capex phase is behind. And if Vodafone Idea has to have significant headroom to invest, then that would mean that at some point more of these dues get converted into equity, which will be a dilution from an existing shareholder's perspective. So that's why my view is that even though Vodafone Idea should survive as the third player, it still may not be the best, long-term investment from an equity holder's perspective. That said, there could be stock price pops, especially if, there is some finalization or there is some clarity on the relief measures. So, those pops can't be ruled out. But fundamentally, I think, the company still has got its task cut out.
Got it. All right. So there'll be a three-player market, but you have a reduced rating on Vodafone Idea. The last few trading sessions, there's been some traction actually on Bharti Airtel. And there was this expectation that maybe we'll see a tariff increase. What are you penciling in terms of a tariff increase, and by when? If you could help us out with the quantum.
see, my assumption in terms of the next tariff increase is sometime towards the end of this calendar year, or sometimes in the early calendar year 2026. I think the expectations have started already getting built in, because it's almost a year, almost exactly a year since the last tariff hike happened. And with all the tariff increase now in the base, and soon that will also get anniversarized in the numbers. So I think, the expectations of the next round of tariff hikes are starting to get priced in. That said, it is very difficult to call out the exact time. But as I said, I am penciling in something towards the end of this calendar year.
Okay. All right. Towards the end of this calendar year. That's what your estimates are factoring in, right?
That's right. Yes.
And how do you see the ARPUs move, say, in the next 2 years from current levels?
So if you look at Bharti Airtel, they are at around 245 as of last quarter, 4Q FY25. I would expect them to almost hit 300 rupees by the end of FY27. Which includes, the next round of tariff increase, and some, organic upgrading from 2G to 4G data consumption increase, etc., that keeps happening on a regular basis.
No, a very useful conversation. I mean, Bharti, we don't talk about this very often, but what a strong outperformer, right? It has been. It was 750 rupees beginning of 2023, and it is basically more than doubled, and that's a large name we are talking about. So sometimes you don't have to look very hard to find the winners. It's right in front of you, but that gets ignored. But obviously this has not been ignored. It's been ignored, I guess, as far as mainstream conversations, etc. go. You're looking at the next big thing, the small cap, the mid cap, but this is a huge, big, giant company which has delivered such phenomenal returns. Balaji, in terms of targets, etc., slightly longer term, beyond the 12-month that you guys put out, do you think this will the stock is a good buy?
I would still think so. I think one interesting aspect that has clearly been visible in the last round of tariff hikes is that Bharti has been able to see the highest revenue growth from the tariff hike that happened last year. Which means that the company has managed to keep churn and downtrading to the minimum possible extent. And I think that is because as the overall general price level keeps moving up, the ability of Bharti's superior quality subscriber base to kind of absorb those tariff increases also starts shining through. I think that is a subtle point, because we have had similar tariff hikes by all three players, but it has been Bharti who has been the biggest beneficiary. So I think, even the next round of tariff hikes, I wouldn't be surprised if that trend repeats itself, maybe in a more pronounced manner than what we saw in the previous tariff hike. And that is why, Bharti's stock is trading at where it is today. And I would tend to kind of, expect the stock continuing to do well, because the execution engine has been smooth. There is a clear line of visibility towards the 300 rupee ARPU mark. The return ratios are improving. The FCF generation is healthy. And with only 3 serious, spectrum buyers in the market, the kind of, competitive intensity, even when it comes to future auctions, renewals, etc., will be fairly manageable.
All right. So Bharti Airtel indeed gets a thumbs up from Balaji as well. Thank you very much for joining us, Balaji. Good conversation, and appreciate you taking out the time for it. Nifty is up 106 points in the pre-open, 0.5% higher. I just want to point out one individual stock, and that's India Mart, up 4%. Nuvama has turned positive on the stock, and the market is taking note of that brokerage call. We'll talk more about it in just a bit. But let's go across to our technical experts for the 9-10 calls as well. So, Darshan?
Well, it's HDFC Life. Buy HDFC Life with a stop under 763.
Okay. And Mitesh, what would your stock be?
delivery for price targets of 393, 395.
Okay. All right, gentlemen. Thank you very much for that. Well, before we hit market open, let's quickly revisit some names on the consumer side as well. Manglam's looking out for Titan and Indian Hotels. Tell us more, Manglam.
Well, we spoke about a couple of initiating coverages yesterday. Today, one has come in on Indian Hotels, where JP Morgan has initiated a late check-in, but, they have a high price or a long stay. They have an overweight rating, 890 rupee target price. The recent weakness on the stock, they believe, is a way to accumulate. That's because, one, they are expecting better than expected revenue per available room growth in FY26. The consensus estimates on EPS were downgraded because of the military conflict. They believe that this can be revised, and they expect strong first quarter performance on a low base and initial signs of a high offtake as well. In fact, the FY30 targets that the company had set itself, they believe that they would be achieved ahead of schedule. The other one that I'm looking at is Titan, where Macquarie has written they've had an outperform rating and a target of 4150 rupees. Why do they say that? Because, one, they believe the first quarter there has been healthy demand for jewelry growth, and they believe that the EBIT margins for the companies have bottomed out in FY25, and they expect 20% plus sales growth in both jewelry revenue and EBIT in the first quarter, and that would mean that is a positive, and that's why they are outperform on the stock.
All right, we'll keep an eye out on this one as it opens up. The pre-open about 0.75% higher on Titan. The first rates will start to come up and we'll get going with what we have. So 0.5% of the sensex, about 0.45% of the nifty. The nifty bank is up about 0.75%, looking better. And mid-cap and small-cap indices are up 0.6% as well. So 160 on the nifty is what you have. And the nifty bank is starting at about 56,500. Okay, so it's kind of flattened out on the nifty bank. The sensex is up 0.5%. Small-cap index is up about 0.5, 0.6 odd percent as well. 100 points on the nifty. The sensex is up around 400 points as well. You know that at the margin, was there some expectation? It was a binary event, who knows, right? But at the margin, was there some disappointment with regards to, Korea not getting bumped up and then opening up space for weight increase as far as India is concerned for global funds? Perhaps, yes. But not really the big driver at all. You got bulk of it, at least with the Nifty 50 heat map opening up in the green. Ultratech, Titan, NTPC, RIL, Power Grid are top of the list. And on the bottom, you got about 4 names which are starting in the red. It's a good start, about 1/3% higher, 25,135. Surbhi.
Okay, 90 points up for the Nifty, though the Bank Nifty is flashing a little bit of red, you'd have to say. Not showing too much of enthusiasm immediately. Let's talk about the Nifty gainers then. On the gaining side, Titan, we just heard the view from Macquarie come in. That's working well for the stock, almost 2% up there. Trent is also up. There's some buying in IT names. Let's see if it lasts today, unlike yesterday. Wipro is slightly higher, 1% higher. HCL Tech is about 1% higher. Reliance is a meaningful contributor. Gain of almost 0.7% on Reliance as well. Lever is up about 0.5%. So that's what's bringing up the upside for the Nifty. The downside, financials are a problem. ICICI Bank, Kotak, SBI Life, Axis, HDFC Life. It's banks and NBFCs not feeling too great this Wednesday morning. Bank Nifty is flashing a little bit of red. Before I hand it over to Nigel, I just want to complete that point on IndiaMart. The reason that stock is up 5% is because a Nuvama note has come out. Nuvama has upgraded it to a buy. It's increased the earnings estimates by 9-10% because it feels that revenue growth will now start moving higher with what the management has been doing. So that's an interesting stock beyond the Nifty, up almost 6% now. Nigel.
Well, that's right. That's a big upgrade actually coming in from Nuvama because they have upgraded the stock to buy from reduce. Remember earlier they downgraded to hold, then they went to reduce. And now, in fact, the target price from 2,100 to 3,800. So big, revision out there. And also the multiple they're giving is 35 times. Earlier they were giving it 22 times. So that's about IndiaMart. What else? MediAssist. That one's moving with some good momentum this morning. So that, in fact, is up close to around 3%. Big shade of green out there on MediAssist, up 4.5% now. Mukant, another one that we don't talk to very often, stainless steel player. The hope was that, in fact, they will see a bit of a turnaround, which hasn't been forthcoming actually in the last few years. But in the last 2 trading sessions, massive volume-based buying is what we've seen out there, delivery-based buying. And that stock, in fact, has moved up in style. So good going on that one. A few other names, not too much of volumes out here. So the Nifty is up close to under 120 points. That's pretty good going. But as we mentioned earlier, it appears the Nifty Bank a bit of an underperformer today, and that's up of only around 30 points. But the number of stocks advancing to the number of stocks declining, 4:1. You like that look on the screen?
Nigel, there's a stock, Enviro Engineers Infra, right?
Yeah.
Which is it's EIEL, Enviro Infra Engineers Limited. Okay, I think it's down. It's down about 1% or so.
Was the big mover yesterday.
Was the big mover yesterday, absolutely. All right, I think what we'll do is we'll look at more stocks as we go along, but our market conversation is what comes up next. So let me bring in Sandeep Bhatia, who's with us. Sandeep, always a pleasure having you with us here. Good morning. Prashant here. Sandeep, of course, is Managing Director, Head of India Equity at Macquarie. Sandeep, a lot of volatility, but the market has been very, very steady. And I guess we kind of, away from geopolitics, start to focus back on more local stuff and more trade-related stuff and all the supply which is coming into the market. How are we placed? I mean, the mood is positive, but there is reluctance to chase things higher in a big way. Would you agree?
Yes, definitely, I would agree. So, pleasure to be on the channel again. Good morning to your viewers and to all of you in the studio. What do we say? I don't think geopolitics goes away permanently. In fact, I would think that we are in the age of geopolitics for the next till at least the end of this decade, for the next 5 years. And in the interim, I think India has actually started on the margin seeing improvement in consumption. I was just reading the May data on credit card spends. That's up some 15%. We all know that the monsoon progress has been good. The monsoon has covered almost all of India except parts of Rajasthan and Haryana, Delhi. So hopefully we are in for a good spell of monsoon and therefore agricultural growth, and therefore rural consumption. So all told, India will be in a good zone in the second half onwards. I think I was just talking to senior fund managers yesterday. The RBI cutting rates, the tax cuts which happened in Feb in the union budget, all of it point to significant impetus given to the economy. So I would think we could be pleasantly surprised in the second half. Valuations remain very demanding. There's a lot of supply of paper. On the flip side, that's where I think the market, as you just said, seems to be in a bit of a balance. A lot of good things happening, but also a lot of supply.
Hi, Sandeep. Is that supply becoming a concern? I mean, just the extent of it, and it's coming from everywhere, IPOs, blocks, etc. And local mutual funds, they're not getting in the kind of equity flows they were getting, say, back in December or January. Is supply a concern?
Supply would be a concern if we see some reversals happening in, further reversals happening in flows into the domestic mutual funds. Supply would be a concern if there's some bad news on earnings. I don't expect that, but yes, if that happens, then definitely supply is a concern. I don't think I would be too concerned about even a market correction of up to 10%. It's something which is required. It's something which is would actually present an opportunity. We had great supply and a lot of issuances coming in last year. It was one of the best years for investment bankers. I think this was seen to be a weak year, but actually it started on a much stronger note than anyone anticipated in terms of issuances. So yes, it is potentially a cause for concern, but a market correction, if it starts a market correction, it can easily, it's actually a good thing for investors.
So would you think that you would not rule out another 5-10% correction from current levels?
Yeah, I don't think at these levels anyone can rule out 10% kind of correction. I'm not saying it's happening. All I'm saying is that it can happen. There's nothing that should not spark any nervousness for investors.
Okay. Sandeep, the other issue is the drivers from here on. So if you're an optimist, you'll say that the RBI is loosening. We have the income tax cut. And who knows, maybe we have some GST revisions as well, which make things more reachable for the average consumer. Do you expect a bigger pickup and a wider sort of a pickup in overall earnings? And is that already in the price now at 25,000? Or could that provide some cushion and maybe even some upside?
You know, we are now exactly the way you framed your question. We are all looking at the margin. At the margin, is there a real upside, or at the margin, is there a real downside? I would think if you say anything of material nature, it should be about 10%. I would definitely, as I said in the beginning, there's going to be a slow grind up on the whole. I think we are not in a zone where we will see a major downfall of over 10%. So let's say between 15 to 20%. I'm not in that camp, but it will be a slow grind up. There are positive factors which are helping the market. The only negative I can see is the amount of supply and the quality of supply. Obviously, the quality of supply is always a concern, and it always, something which we know post facto. Once the supplies hit the market, once the first quarter numbers are out, that's when we realize that these were duds. So, yeah, this is where we are. At the margin, positive, but need to be careful and would take any correction in market as an investment opportunity.
Okay. All right. Sandeep, I recall you joined us post Trump's first round of tariffs, and you said India will outperform. And kudos to that call, because India actually did pretty well and we bounced back very, very well. And one sector I think that you said is pretty well placed is pharma, if I remember correctly. Is that a sector that you're still bullish on?
We continue to like Sun Pharma. We think that that's something which offers both earnings growth and in a very high valuation market, still decent valuations. So Sun Pharma is definitely what we like. I think we are now in definitely a stock pickers market. Rather, I would say that we are in a stock pickers market for some time in the future too. As I said, I don't expect a major correction. So this is not going to be a screaming buy market. Therefore, you have to be extremely careful. Either look for earnings growth of 12%, steady earnings growth 12%, which you see can continue for, let's say, 2+ years, at least 3 to 5 years. Then you will be in the money in that stock. Or you look at earnings surprises. I think one sector that we initiated and we liked has been the hotel sector. We have seen some negative headwinds come through because of the air accidents and because of the wars and because of travel. So again, this is a structurally bullish sector. We like companies such as Chalet or ITC Hotels. And so if there is a correction in some of these sectors or stocks, then that's something which investors should look at. As I said, look for steady earnings growth and price corrections in high quality companies. Those are good names to look at.
No, absolutely. Sandeep, what you were saying earlier, right? 10% kind of fall, no one should panic. I don't think anyone, that's the problem. There is no panic. As good as there's no panic, but it's also a problem, right? Because everything gets bought into so fast, and before you know it, they're right back. They snap back so fast nowadays, right? So there's no sustained, or it doesn't stay low for very long. First of all, the dips are not very sharp, and then they don't last for very long. Actually, they last for very, very short times, and it's getting shorter and shorter. Is there a problem? You always got to have a list ready, right? And cash in hand to be able to take advantage of any of those opportunities.
I think that's a very sharp observation. That's for something which I also been talking to fund managers, that these pullbacks and this characteristic of the market that you are just described, that it's a short and sharp pullback, is actually something which has happened in the last 2+ years. It's never been like that before. When we got a correction, we got a healthy correction, as it was said, and it was quite a prolonged correction at times. But we are not in that zone now. And, I'll give you a perspective on this. We had the Macquarie strategist come in and meet investors just 2 weeks ago. He's Mr. Victor Schwetz. He comes regularly on your channel. So I'll tell you what when he was discussing India, what he said was India will emerge as a separate category within the emerging markets. So most fund managers, when you talk to them, they're based in Hong Kong, Singapore, Europe, or US, they look at a bunch of markets in the emerging market universe. So there's, of course, the big US market, then there's the European fund managers, and then there are emerging market fund managers. So the emerging market pack is where India resides. While India is part of the emerging market, actually what happens in the emerging market pack is that two countries, such as which are Taiwan and Korea, are developed. So they actually will eventually migrate out of the EM pack, emerging market pack. Now there's another big giant, China, which for all practical purposes, and even Macquarie's view is that it's in a structural kind of slowdown, and there's structural challenges of investing in China, which means that the only other large market that remains in the EM universe, in the emerging market universe, is India. And actually now he said that India will emerge as a separate category and a separate market within the EM universe. So like you have US specialist investors, you have, let's say, European investors, which is still a couple of countries which are in Europe. But India will actually emerge as a separate investing entity within EM, because most of the other EMs don't make much sense. Now, that's not going to happen in 2 years' time. This is a 5 to 10 year phenomena. But we are witnessing the migration of India and the separation of India from the entire emerging market pack over the next 5+ years. So this is probably one of the golden periods of investing in India.
Which basically means that you've got to pay a high price. You've got to be ready to pay a high price of admission, right? It's a good point, and we're most likely going to be speaking with... I read that note that Victor wrote, and we'll be speaking with them next week. So we'll bring up some of these things. But good explanation, good context, Sandeep. Thank you very much for joining us here on the channel. You know, there's so much demand, right? So you got to have supply on the other side as well. So oftentimes we complain about all the supply, but supply is good. Otherwise, demand is going to overwhelm. And we're talking about some new supply which is coming to the market, a new IPO. So it'll be HDB Financial Services.
And it's been one that's been awaited for a long time. It's going to be the largest issue, perhaps, at least as far as this year is concerned. We haven't seen something as big. We're talking about 12,500 crores. And the subscription is open today. The price band is between 700 to 740 rupees a piece. The proceeds of this issue will be utilized for future capital requirements. About 2,500 crores comes into the company, and then there is a OFS part of it as well. So let's understand HDB Financial Services better. We have with us G. Ramesh, Managing Director and CEO, as well as Jaikumar Shah, Chief Financial Officer at HDB Financial Services. Gentlemen, good morning, and thank you so much for joining us. Welcome to the studios. This promises to be the start of perhaps many interactions in your due course of your listed independent financial market journey. So very interesting business, sirs, and I just want to put some context out there. A lot of your lending is happening in tier 3, tier 4 parts of the country. And for the benefit of our viewers, I just want to put this out there. We'll put some graphics as well, that the 3 key business verticals for HDB would be enterprise lending, which is almost 40% of their business. There's asset finance, which is another big piece. And then there is consumer finance. So just broad thoughts over there. You've managed to grow the AUM, if we go by past years, CAGR at roughly 20%. As you come to the market, what's the sense on the scale and size of the business, the growth, and the key drivers ahead for HDB? So,
thank you for inviting us today, and good morning to all the viewers. So we started the company in 2007, started lending in 2008. Today we have a balance sheet size of about 107,000 crores. It's an organically built balance sheet. We didn't do any acquisitions over the years. We have 19.2 million customers as we speak, presence in 1170 cities through 1771 branches. So that's the scale of our distribution. That's the scale of our business. And we've been growing through the last 17 years of our journey. What we believe is that India is a huge opportunity for our business. And just to clarify to our viewers that we are a subsidiary of HDFC Bank, but we do not get any business from HDFC Bank. We are independently an entity. We don't get leads from HDFC Bank or any of the group companies. And that's been since inception. We run our own origination, our own risk management, our own collections, our own technology stack. So our business and technology stack is independent of the bank. And we believe that, with a product suite that serves the needs of aspirational India, we are well poised for making the opportunities in the future.
Mr. Ramesh, I'm glad you're clarifying that point, that from a lending perspective, you're very different from the bank.
That's right.
But just clarify on this part, you do get, you do some services for HDFC Bank, right? The sale of services, as that part of it is called.
That's right.
I think FY24, it came down a little bit, the contribution from that segment, FY23 also. So just tell us what the thought is, because it's been giving you more than 1,000 crores of revenue every year.
Right.
So going forward, will that continue to be a big revenue stream? Are you looking to scale it down? What's the thought? The BPO part of the business for the bank.
Right. So we provide some BPO services to HDFC Bank and only to HDFC Bank. It's in the nature of collection services and some back office work that we do for the bank. That scale of that business really depends on the volume requirement of the bank. In the last few years, the bank has invested in digital capabilities, so some of the requirements have come down. While it's a significant part of our revenue, it's a very small part of our net revenues, which is our profit after tax. Given that our loan book itself is now 1,07,000 crores and generates significant revenues, it's a small portion of our net revenues in that sense. So not very material from a business perspective.
But it'll come down. That source of revenue eventually will be coming down.
Yes, relative to the lending business will come down, yes.
Let me just complete that point. Good morning, both of you. Thanks for coming down. So there are these RBI draft rules, right?
That's right.
With regards to overlapping business. How, as they are firmed up, what do you think is going to happen? I mean, what are the possibilities? How will you have to deal with it?
So essentially, the draft rules came out about 8 months back, right? Yeah. And the draft rules are really a document that's put out for discussion, which enables the industry to give its feedback. And the feedback has gone back to the regulator, and they're looking at the feedback. And as per the annual report, they're looking at the feedback. As I said, for us, the business is independent of the bank, right? And so very difficult to look at what might be the final circular at this point of time. I'll be back in your studio when the final.
Is it possible you may have to get rid of the business or merge it?
So those are scenarios we'll look at based on what the final circular says. As I said, we are run as an independent business. We don't see any... And the reason why we set up this business as an independent business is because we chase a set of customers which are fairly distinct from what the bank does, right? Or from what retail commercial banks in India do. For example, we have 19 million customers and 1,07,000 crore balance sheet, which means that our average ticket size is just about 1,65,000. We only do retail lending. Our top 20 customers account for less than 0.34%.
No, you're it's very, very granular.
Right? So that's the level of granularity of a business, and which is what I think is best service to an NBFC model.
Yeah, that's absolutely. And we'll talk about growth, and we'll talk about the real stuff in just a bit. I just wanted to get this point about HDFC Bank out of the way. It may also lead to HDFC, the bank, having to sell their stake down to 20%. If that were to happen and it's no longer the parent, I mean, then does it affect...
So it doesn't affect the business model of the company in any way?
Ratings, ability to access funds?
I mean, again, it depends on scenarios of what happens, where does the ownership get transferred to, and things like that. So, I said, you invited me to your studios again. We'll talk about it in the final circle.
I think you want to chip in as well.
As Ramesh quoted, RBI in its annual report has said that, they will issue based on the feedback received. And I think that's an important point to know, that the regulator has taken in the feedback and it will work with us. Today, RBI is probably one of the finest regulators in the world, right? They've classified us as an upper layer NBFC, and as part of that, wanted us to list. So we'll work with our regulator to make sure, what's best for the company, what's best for the country. We'll go ahead from there.
Okay, all right. You all can't give us fixed numbers, but I just wanted to know about the way things are going to move ahead. The cost to income ratio is relatively high if I look at some of your peers. So how do you see that panning out in the time to come? And in the past year, maybe a couple of one-offs, but the credit cost spiked up a little bit. How is asset quality looking, and what's the way ahead?
So let me take that one first. So if you look at how Ramesh explained a bit about how retail we are. Now, when you're touching every single part of the country, right, and your average ticket size is approximately 1,65,000 and you're disbursing 4,000-5,000 crores a month, you can imagine how many touch points you have. If you were to give out a 5,000 crore loan, it's very different to giving out a 50,000 rupee loan. You still have to do your KYC, you still have to make sure your customer is good, you still have to make sure, you've understood the credit of the customer. That kind of retail granularity, right, demands the kind of cost that it does. The most important focus for us is the return that we generate at the end of the day. I think the way you look at different models, and you all analyze probably more than I can imagine, each model works differently, and this is a product that we've developed in a manner that services the real Bharat and at the same time delivers the right return for our shareholders.
So on that point of asset quality and what your shareholders can expect going ahead, I think about 30% of the book is unsecured right now, 70% is secured assets. Are you planning to maintain a similar ratio? Just give us some more sense on the unsecured part, because typically that's better for business, higher yields. So what's the thought process between secured, unsecured, the way you see yields moving as the book grows?
So we have a 73% secured and 27% unsecured as on March 31st, 2025. That's been in the range of 75, 25, 70, 30 over the last few years. Unsecured lending is a business that we've been doing since 2008. That's the first business we started. As I said, our focus has been that how do we touch our customers' lives as many times as possible through our products. So our product development strategy has been around making sure that whenever a customer has a credit need, do we have a suitable product that meets the customer's requirements? So it's a business that we've been doing now for 15 plus years, very comfortable with a 75, 25, 70, 30 range.
Okay.
Yeah.
In terms of growth, I mean, there is, it's a long, highway of growth, and most lending institutions, and you're well diversified, you've got the name, you've got the branding, you've been doing this for a long time. Could you give us some sense of how growth will look? Large numbers, since we can't be specific, let's go long. We can't talk short.
So, so let's look at a few fundamental things. Right?
As you said, you're about 1 lakh plus or crore size.
Yeah. All organically built, yes.
Yeah. So say in the next 3 years, where will that number be? I'm talking about,
Right. Okay. So I can't give you a forward-looking guidance, but what I can tell you is aspirations.
You can't give me forward-looking, so maybe really forward-looking. That's my roundabout. But
so. One is that you look at our distribution, 1170 cities. You can imagine what the 1170th city actually looks like, right, in India. 70% of branches in city number 101 and beyond.
Yeah.
Right? A phygital distribution model, and one of the things Jay was referring to when we said our cost to income appears slightly high, but that's also because we're looking at the customer and saying, what is the best option for this customer to engage with us? So we don't say you can only do digitally or you can do physically. We're saying choose the method that you want. You can do a purely physical or purely digital. We are comfortable with either. Our response times on processing applications are no different, whether a customer comes into the physical model or digital model. The fact that the back end is fully digital, 97% of applications have a digital footprint, right, in the form of processing. And one of the propositions we offer to our manufacturer partners, and we work with more than 100 of them between our consumer finance and our commercial vehicle and construction equipment business, is that irrespective of where you are in the country, our response time will be the same. So whether it's a metro like Mumbai or whether it's a small town somewhere in Assam, our response time is the same. Our customer growth has been about 29% in the last 3 years. Our AUM growth has been about 20% last year. And we continue to think about what new products we can add to the suite we already have. And that's the way we think of growth.
Just a quick last point. Again, I know you can't give very specific answers, but we need to understand an assessment on the borrowing mix, the yield, the margin profile that aspirationally you think you can sustain and maintain. I think first half it's been around 7.6%, Jaikumar. In the past, on a full year basis, you've maintained margins upwards, northwards of 8% as well. We're in a rate cut environment. So what's the sensitivity to margins in a downward rate regime? Just give us some color. I mean, is 8% sustainable, long-term basis?
I'll give you 2 components to it. One is our yields and second is the borrowing cost.
Yeah.
And we have a very matched principle in terms of how we borrow. So we don't borrow short and lend long. We don't borrow too long and lend short, either ways. So we have a 3.5-year book approximately, and we borrow 3.5 years. Now, on that, one important component is, if you look at rates that were there in 2021-22, it had gone down to as low as 5.7 and 6. And the rates that came out in 2024-25 were approximately 8%. So one of the things which happened is a spike of around 200 bips, which just shot up very fast. Now, for a retail business like ours, when you're going to a customer, neither does it go up very fast, nor does it go down very fast. So that's a bit of spike which has come through. As the balance comes back, I think things will fall in place.
Which means higher margins eventually as we go down the cycle.
So the way I would look at it is, what was I borrowing at maybe in January to now? The rates have purely cooled off by almost 50 bips. That's just a statement in the market. And with our parentage, with how we operate as a company today, we are probably the finest borrowers in the market. And that's just public data. 37% of our loans come from bank borrowings, and more than 45% almost comes from NCDs. We're the largest issuers of debt today in the 2 to 3 year space in the country. Okay. So we don't talk about it as much, but we're very happy that, we can work behind the scenes. Our treasury is completely independent of the bank. We operate on our own and make sure we fund our own assets.
Are your most of your loans, are they fully linked, external benchmark linked? I mean, how frequent is the reset? I'm just trying to understand how quickly you have to revise them lower.
So in terms of our loan book, only our LAP book, which is around 23% of our overall book, is floating.
Okay.
The remaining entire 75, 76% is completely fixed rate.
All right. We'll talk numbers and guidance next time you're on, and after that as well. Thank you both for joining us.
Thank you. And thank you so much. Pleasure.
Good luck.
And during that conversation, we already fixed the next couple of interviews. So looking forward to having you back in the studio. Thanks a lot.
So much. Thank you for inviting us today. Thank you.
Well, let's get to the next management then. That of REC. Mr. Harsh Baweja, the Director of Finance at REC, joins us to talk about the impact of RBI's new project financing norms, rate cuts, as well as the outlook for the remainder of this fiscal. Hi, Mr. Baweja. Thanks a lot for joining in. Well, it was definitely a relief that came in from the RBI when we looked at project financing norms. Help us out now. Help us decode some of these final guidelines. How do you read this? And more importantly, how will it impact your business as well as your capital ratios?
As far as REC is concerned, since this is not coming retrospectively, this will be prospectively. So ultimately, our the book up to 30th September 2025 would be governed with the existing rules, and this will be applicable to the financial closures to be done after 30th September 2025. So it will have a very insignificant effect on the balance sheet of the company. Reason being that as of now, my provision on the standard assets is already 0.94%, whereas the RBI has mandated the minimum 1% provision for the under construction project. So we don't think that this is going to impact our balance sheet. Number two, NBFC's accounts are basically governed by the India system, and whatever additional provision, if there is on account of RBI provisioning are there, that is routed through the impairment reserve account. That doesn't affect our PAT, basically. Number two, the guidelines says that total provision of 1% on the under construction assets is to be made. So in case if I do the financial closure of any of the asset in the Q3, then the provision will have to be made progressively based on the disbursement to be made in the quarters to come. So it is going to make any effect, very insignificant effect in the books of accounts, and that will be done only progressively. And simultaneously, I can say once that asset achieves the completion, then the extra provisioning made will be reversed to 0.4%. So ultimately, this will be a continuous business after the March without affecting my previous business, which has already been done.
Okay, got that, sir. Now, your company reports low credit costs, right? But as a key market player, do the final guidelines also indicate that RBI does not see increasing risk in project financing? And can we expect that for your business as well?
As far as my credit costs are concerned, that is already at a very low rate, and we make a provision of 0.4% of my stage 1 assets and 0.5% of the stage 2 assets. For under construction project, as I have already explained you, for the new projects, we will have to make an extra provision. But having said that, if you see my numbers of the 31st March 2025, I am already at the level of 0.95% of my provisioning in the standard assets, stage 1 assets. So perhaps we don't see much of the impact on the ECL numbers and the credit costs in the near future, sir.
Okay. Mr. Baweja, another tailwind perhaps is, of course, the rate cuts. We're in a downward rate regime. So how will this impact your spreads? Any internal assessment that you have done for the business? Maybe if you can give us some sense of margins.
As far as the RBI's rate cuts are concerned, we have yet to see the impact coming to the market. Since if you see the bond yield, which has been happening for the last 2 or 3 weeks, even post the rate cuts, there is not much of the rate cuts in the bond yields that is coming in the market. Rather, before the rate cuts, REC could raise one of the cheapest source of funding through the institutional bonds. But in the recent times, say within last week or so, the bond yields have gone high. So we have yet to see the impact of that and the impact of the CRR, which is to be done in progressive manner. But yes, some insignificant effect in my cost of borrowing will always be there, since whatever fresh borrowing is coming, that will be coming at the reduced rate. And we think that our guidance regarding the NIM, we have given a guidance of around 3.5% to 3.75% and a spread of around 2.75% to 3%. We hopefully see that we would be able to maintain this range within this range, and we'll monitor it quarter by quarter. We see that impact further coming up in the market.
All right, so let's get back to the guidance then that you've given. I think around 12% loan growth. Last year, the numbers impacted because of higher repayments. How much of repayments do you expect this year, and what kind of loan growth should we be factoring in?
Since we are into an NBFC business, we will have to understand that prepayments are the part and parcel of the total business profile. You cannot ignore the prepayments. Number two, in case if any of the agencies is making prepayment to us, it means those agencies are the sound parties, sound clients. And if my clients and the loan books pertains to the agencies, those over the sound books, sound agencies, that in that case, I can say that my balance sheet is also very strong. So prepayments will keep on coming. We are not afraid of that. We treat it as a part of the regular business activities. But yes, we expect that our AUM will grow at the rate of around plus minus 12%. And quarter on quarter, we'll see the progress, what is happening, what is the percentage of prepayments are coming up. Since one of our products, that is revolving bill credit facility, that in itself has the characteristics that agencies, whenever they have the surplus, they can make the prepayment even without the prepayment charges. So that prepayment will keep on coming, and that will affect our loan book also. But keeping that aside, rest are the very insignificant amount. Some of the amount had been made by the prepayment by one of the borrower who had raised the fund through their IPO proceed. Similarly, one of the big borrower had made the payment to make their headroom available for their new sanctions, then they had reached the exposure level. So these type of cases will continue to happen. And we expect, despite all these things, that we should be able to maintain plus minus 12% growth.
Okay, all right, got that. Mr. Viveja, finally, we are in Q1. What should investors expect from REC as this year rolls on? Any sense of how so far business has shaped up in this quarter, growth trends, yields, anything you can leave us with?
Quarter end is not very far off. Let us wait for the quarter end to be completed. We are working very hard on all the aspects. We are focusing on improving our quality of the books of accounts and quality of the assets. We expect that by the year FY26, we will be a zero NPA company, and some of the assets are at the advanced stage of resolutions. Disbursements are absolutely on the same track. In case if the prepayment doesn't happen, that it should be on the same target as we expected earlier. And as of now, for this quarter, we don't expect any effect on the NIM and the spread. That may be continuously on the guidance. And we say that since we are in the financing business, we should keep on reviewing every quarter what is the impact. The things are changing very fast. So market is moving very fast. 15 days before, the yield rate was different. Yesterday, the yield rate was, bond yield rate was different. I am raising fund from the market. Even the international market is different. We have raised from the ECB markets. The rates which were available at the end of the March are very much different, the rate prevailing as of now. So we have to review it, and we have to focus on each and every day and each and every quarter, and we'll keep on reviewing. But yes, as far as the borrowings are concerned, on the date of requirement, we don't want to keep any funds idle. But yes, on the date of requirement of the fund, which source is cheaper to us, we go for that kind of funding so as to arrive at the good cost of borrowing.
Well, thanks a lot, sir, for joining in and giving us a sense about the impact of RBI's changes as well as some sense about business. But we look forward to chatting up with you at the end of the first quarter numbers and get a further sense about the year ahead. For the time being, we'll slip into a short break. On the other side, we'll get an exclusive chat going with Mr. Mohanty of the Indian Rare Earths Limited, as the government is expected to finalize a rare earth magnet manufacturing scheme soon. Stay tuned for that conversation.
Okay, welcome back. 140 points, 25,180 is where the Nifty is trading at. Now, the government is expected to finalize a rare earth magnet manufacturing scheme within the next 10 to 15 days. This comes after China curbed the export of these magnets, which are critical for electric vehicle manufacturing. Sources say that the new initiative will have an outlay of 1,000 crore rupees and support capacity of 1,500 tons of rare earth magnets. The secretary at the Heavy Industries Ministry, Kamran Rizvi, has said India is in talks to import rare earth minerals from Japan and Vietnam.
Are we looking at any other countries where we can source the magnet from, except China?
So you are aware that rare earth is available in Japan, in Vietnam, and efforts are going on to bring from there.
So now we have someone who really knows the lay of the land as far as rare earths are concerned. Mr. S.B. Mohanty is CMD in charge and Director of Finance at IREL. Mr. Mohanty, good morning. Thank you very much for joining us today. Important that we are having this conversation to get a real sense of where we stand. So as you heard, the government, of course, is wanting to set up that processing capacity here, plans to import some of this as well, as we are facing curbs from China. Give us a sense of state of play here in India with regards to these rare earths. And the rare earths I'm talking about are specifically, 4 or 5 which go into these magnets. So I hope I'm pronouncing these correctly. Neodymium, there is dysprosium, there is terbium, etc., etc. I mean, these 4 or 5 of these rare earths which go into these magnets, which are important for the auto industry, EVs, etc. Do we have sort of enough reserves of this here in India? Do we have the processing capacity? Could you give us a sense?
Yeah. Good morning, and thank you very much for calling me to this program. Actually, the India is having heavy mineral of 1,300 million ton of capacity, and out of that, monazite will be around 0.1%. That is 13.15 million, and rare earth will be 6.9 million ton we are having. So, but as per the content of the material, so we are having heavily this lighter rare earth elements, and this heavier part is not available in our resource, which is found only in minuscule or in the ppm level. So that is the key issue. Otherwise, if this magnet making is, we'll look into the magnet making, they are ND, PR, and this DYTV. This NdPr is neodymium and praseodymium. These 2 elements are used. And at our capacity, we are having Nd oxide, and up to oxide level we have been making it. And we have got sufficient quantity as of now, because earlier 2020, we have tried to see what is the market absorption of this material. And that time we have made one expression of interest. But during that, very few parties came up, and ultimately all of them backed out because of this inverted pricing mechanism. So how it has happened is there are 2 aspects. One is our this feed material for NdPr is costlier than the NdPr, and at the same NdPr oxide, and at the same time this this NdPr oxide price is higher than the metal as well as this alloys. So on that basis, the
the economy of scale is not properly made, so that people can come and invest in this area. If you look into our particularly the how India is poised for the heavy rare earth elements, we have to get it either imported or we have to look for the resources like from the hard rock minerals, which is available in India, but that will take little bit of time.
Yeah. Mr. Modi, so just to clarify, you're saying that, and you need heavier and the lighter elements to essentially make these magnets, right?
Right.
And the heavier we don't have, so we have to import them. That's what you're telling us.
Yes.
Okay, got it. I just had a basic question. You know, processing of rare earth and getting them out, I mean, it's seen to be, as far as I have understood, extremely environmentally damaging as well. And there is very little one can do to mitigate that damage. And that is why many countries around the world have not developed these industries, and they sort of have relied on China all these years. Is that a correct assessment? And what is our plan? I mean, there is, of course, getting it out of the ground. The other is processing it. So just your thoughts on both.
Actually, yes, that is correct. Partially correct. Actually, there are two different technologies are available for making it. One is calciothermic reduction process, and which is not environmental friendly. At the same time, this molten salt electrolysis process, if that is more environmental friendly. So if you look into those things, people, the countries started China, they sent the material to China, and China processed it because of this environmental rules and regulation. Initially, China was having around 200 different companies operating in their country, and at that time it was processed, and the environmental laws regulations are not followed, particularly there. Cheaper manpower, all this source was happening there, and by that way, the prices, whatever is coming for this product, the cost of production of these materials are at a cheaper price they are making it. And yes, of course, the environmental footprint is definitely there. In our country particularly, we are looking for this molten salt electrolysis process, which is some of the magnet manufacturing who have shown the interest, they are having this facility developed already.
Mr. Mohanty, so I'm trying to simplify it further for our viewers. You know, when this crisis unfolded upon the whole world, including us, and most of the auto companies are saying that they have these magnets, maybe a supply for about 2-3 months. After that, it could be problematic. So now we're talking about this Atmanirbhar scheme, right? To even try and get self-reliant in these rare earth magnets. So just simplify this for us. You're saying the heavier type of earths, they're not found in India. So that's a separate issue. So to what extent can we look at manufacturing these magnets in-house? There is first this question of whether we have the required type of rare earths. Then is the question of whether we can set up the refining capacity, and I'm sure that's not going to come up overnight. So realistically, what are we talking about in terms of Atmanirbharta when it comes to these magnets?
Okay, so what happens in our process? We are getting this feed material for this rare earth is monazite. And this process is entirely cumbersome and complex. And this rare earth element, what we are getting is not of economy of scale. So on this process, and this rare earth elements are radioactive also, because monazite is a radioactive element. That further make it complex. So the process is also difficult. And as a result, what is happening? We focus on our lighter rare earth, particularly NdPr. There is no issue. We have developed the capacity. Right now, 11,000 ton of REO we can produce. So with that, we can have around, we have got capacity of around 800 metric ton of NdPr. So from there, around 2,400 ton of magnets can be made. But because the feed material is not available, because you know the challenges we are facing, particularly the sourcing of this monazite processing.
So, sir, just to understand, because I mean, please pardon us, these are very, very technical processes and terms. So we're trying to simplify this for our viewers.
Yes.
You just said that 400 tons of magnets can be made. So are you saying that with the available, reserves that we have, we can manufacture 400 tons of these rare earth magnets in India as of now?
No, I've said NdPr oxide is the feed material for making of the magnet. So NdPr oxide we are making. From the oxide you have to make the metal, and thereafter the alloys, and this magnet will come up. So now currently we are having NdPr oxide. We are producing around 400 ton. So but we have got a capacity of around 800 ton. So we can cater, if full capacity we operate and we get the entire monazite for processing, then we can go up to 800 ton, and 800 ton can cater to requirement of around 2,400 ton of magnets.
Got it. So we're working at 50% of the current available capacity of this, pretty important material, which is the NdPr oxide.
Just one more point, sir. The ratio is 1:3 then. 800 tons can produce 2,400 tons, correct?
Three times.
Three times.
That's the rough conversion ratio. Yeah.
Okay, got it. So, that helps us understand some of the basic brass tacks. Now, sir, the scheme apparently is going to have an outlay of 1,000 crores. So the government wants to make India as self-reliant as we can be. What should be the ask? And private industry wants to chip in. I mean, we've heard from a lot of, metal companies. Nigel's been telling us about, for instance, the Vedanta Group has been talking about it. What are the first steps? Where should the money be put? Refining capacity will take how long? How can we become more self-reliant? What would your recipe be? Whether it's mining of the rare earth, processing, and ultimately making those magnets?
Right now, what we have to do is we have whatever the NdPr oxide we are having right now. Let's have this facility for the magnet making, so that we have to go stepwise. First step will be whatever NdPr oxide we are having, we should be in a position to convert it into the magnet. So before going for magnet, we have to convert it to metal to alloys. These technologies are heavily guarded, and right now the technologies are not available in an economic scale. BARC and DMRL, they have got the technology, and we have to upscale it. So that is one aspect. So when we are looking for what is to be done right now is one aspect is we have to ramp up our the production capacity right now. That to make it the nameplate capacity we should achieve first. So thereafter we have to look for the demand. So demand 2030 it will be coming around 8,000 ton of magnets roughly as of date it is spoken, but it is very difficult to predict the exact requirement of the magnet in the country, because magnet is as such magnet is not getting imported to the country. It is embedded to the product, and product is coming to country, and the product HSN code whatever is there, that is different. So we are not in a position to predict exactly how much quantity of magnet is required. So as such, what we have to look for is instead of monazite, we have to look for this ionic clay where the process is small. So quickly we can come to this rare earth chloride stage, and from there we can quickly go for NdPr oxide, and thereafter this making of metal and alloys. So by that way we have to proceed. Initially we have to look for this import of other source of this rare earth elements. That is one, and utilize our fullest capacity. And where our another one is this circular economy, where this end of life magnets, where we are utilizing right now only 1%, and we have got a potential of around 20% we can utilize it. Where you can see in China it is 100% they are recycling. So in some cases of lithium batteries, which was earlier 5%, they have gone up to 95% recovery. So in this front, if we will be in a position to recover better, so that will also solve a lot of issues in our case.
Okay, all right, Mr. Mohanty, you're giving us a good science class this morning, and we request you to come back on the channel, because we can have a longer discussion on this front. But very quickly, because the markets are live as well, and the markets would like to understand what is the private participation. So have you heard about any private participation from the likes of Vedanta, as Surbhi has mentioned? And is there any role that's chalked out for a company like GMDC? Because there is hope. The management out there has been saying that they're looking at this part of the business. So have you heard anything on both these two companies?
So initially GMDC, yes, they are going ahead with this. They are looking for hard rock mining, and definitely they are coming up with the complexes coming up there. And we are also looking for this hard rock mining in Rajasthan, Siwana Ring as well as Kanthai, where this hard rock mineral is available, and that contains heavier rare earth also. So quicker we go for that, that will be better for us. And similarly, you are talking about other like Vedanta. Yes, Vedanta, we have not heard they are coming up for this magnet making. But other private players are there who are showing their interest. 5-6 of them are there. And we hope the things will change soon.
You could name a few, sir, of the private players?
Like Intelush is one, and other one is Midwest. And
These are all Indian companies, private companies.
Indian companies, yes.
Okay, got that. So, very, very interesting conversation and a lot of science, as Nigel said. I'll have to go and revise my periodic table. Do you guys remember the periodic table?
Oh, God, 108 elements. Don't ask me to name all of them.
Hydrogen, helium, I think
it's all tongue twisters.
But Mr. Mohanty, you did say feedstock, right? That we don't have the feedstock. What is that feedstock?
I'll let you know. 6.9 million ton of this rare earth elements are there. But the challenge is how to access it. So although the minerals are there, then you should have the surface right also. Because actually all these are available in the placer deposits where this habitation is full of habitation. So getting the access to the land is very difficult. And there is a misnomer going on, and some illegal miners they spread this news that it spread cancer and all. But actually, what happens in reality is when the monazite, which is the radioactive element, it is taken out from the pit material, so it became background radiation reduces. So on that front, it is rather more beneficial.
Yeah.
So those things, misnomers are not there. And on top of that, if I will compare, this Chinese source is 6%. They contain 6% of rare earth. And in India, we are having 0.056%. So they are superior in 100%.
Yeah, absolutely.
That way,
and so,
to get only 800 tons, that is the nameplate capacity, 800 ton of NdPr, we have to handle around 10 million ton of raw sand. So you can this volume.
Wow. Very, very fascinating stuff, sir. Thank you very much for running us through all of that. And maybe you can come back as we continue the progress on this front in terms of setting up this industry, actually, the entire value chain. And there are so many elements, as you said, have to go step by step. But really appreciate you sort of clarifying a lot of things, much better understanding, and I hope useful for the viewers as well. Thank you.
Thank you.
Okay, all right. We got 130 points on the Nifty, 25,180 at this point. We take a quick commercial break here. We'll focus on commodities as well. Manisha back with us in just a bit from now. There are some flashes, interesting stuff coming in from Mr. Mukesh Ambani, Chairman Reliance Industries, in an interview to McKinsey, and we'll take note of that as well in just a bit from now on the other side. Stay tuned.
Welcome back. The markets in fine form, 134 points up on the Nifty. Mid-caps are also in cruise control mode. Let's now turn our attention back to the commodity markets and see what's the latest. Manisha has not been able to take her eye off crude at all last, I think, couple of days. I wonder if it's still crude or something else, Manisha, now this time.
Oh, well, you know, with crude just about holding 1.5%, decided to move on to some other commodities as well. While crude, of course, stays in headlines there. But you have to look at the kind of gains that we've seen come in for the copper prices. Well, that is trading at a 2-week highs and has shown quite a resilience, actually, with all that has been happening in the global markets, whether it has been about tariffs or about geopolitics as well. The currency is moving all over the place. China data not coming well, but we have seen copper prices show that resilience. Well, the reason that you have seen gains also come in the overnight market is the Iran-Israel ceasefire. It also has been about dollar index slipping back below that 99 level has been supportive as well. And then when you look at the markets right now, it clearly is a huge arbitrage that you are looking at in the space. Copper prices are trading in a backwardation one. When you look at the cash versus the 3 months, that is how it trades on LME. The cash is at a $345 a ton of a premium to what the 3-month futures are. And this is the kind of situation that you have until June 2026. So the near-term demand for copper definitely seems quite supportive there. Also, when you look at the ready available copper inventories on LME, they're down by 80% in 2025 so far. Actually, when you look at the inventories from March onwards, the last 4 months have seen inventories decline by 65%. This is the lowest kind of inventories that you have seen on LME in almost since 2023 August, perhaps. Interestingly, with the kind of LME inventories that we have right now is less than 1 day's global consumption. So that is what clearly seems to be adding premium to prices there. Interestingly, when you also look at the refined copper shipments, well, to US have been at a 200,000 tons, which is the highest in a decade, is what we've seen in this year until now. While the traders are reacting to the rapidly falling inventories, potential US tariffs, it also has been about pricing crisis at smelters. And that really should come to your notice because excess capacity, insufficient raw material has taken the prices on the higher side. So much so that the spot treatment charges right now stand at $45 a ton. When you look at the copper prices, it has been steady, as I said, resilient even. For the week, we are up by a percentage point, up 2% for the month of June. And in this year, outperforming the other metals with 23% of gains.
Okay, all right. Manisha, thank you very much for that. So that's essentially the commodities picture. Let's talk about some individual names now. Torrent Power, the stock should come up on your screen. Vivek is standing by with what's going on here. I think sharp bump up and then a bit of a drift is what we are seeing. Vivek, take us through it.
Well, that's right. So Torrent Power is in focus. This is an important as well as a material development as far as power distribution companies as well as power distribution itself in India is concerned. MERC, which is Maharashtra Electricity Regulatory Commission, on a public notice on June 23rd, has expressed satisfaction that Torrent Power can go ahead and offer parallel DISCOM services in 3 key areas, which is Pune, Nagpur, as well as MMR. So now the company can actually act as a parallel DISCOM service provider or as a parallel power provider to simplify it. Now, what MERC has said is that they express satisfaction for the company. This will act as a parallel electricity distributor. And interestingly, Torrent Power's offer as far as, this particular service or offering of service for power is actually at a slight discount to what the current prevailing rates are. Now, remember, company had actually gone ahead and petitioned to act as a distributing company in December 2022, and it was under evaluation for the past 2.5 years. Why is it important as far as Torrent Power is concerned? The company had projected a capex of close to 15,000 crore on which it could get an ROE of close to 15.5%. What is the capex towards? Capex is for 5 years towards transformers, distribution lines, substations, as well as related assets. Now, importantly, MERC will hear the final petition filed by Torrent Power on July 22nd, and which is when we will get to know the final outcome, whether they can go ahead and act as an alternative or as a parallel distribution provider. JM Financial today, in a note to its clients, has mentioned that this particular development is value accretive and can open a new stream of opportunity in future. It's an important development, number one, for Torrent Power and also for the power DISCOM space, given the fact that this could act as a precursor to going ahead and seeing more players as far as power service provision is concerned in the DISCOM space.
Okay, all right, Vivek, got it. Thank you very much for that. We will have to take a quick break on that note. Come back on the other side. We'll have Vishruth Rana of S&P Global to discuss growth and inflation outlook amidst geopolitical volatility. Welcome back. So we're talking macros now. S&P Global has increased India's FY26 GDP forecast to 6.5%. Their earlier estimate for the country was 6.3%. They're also expecting significant growth uptick in China, despite all the tariff conundrums. Vishruth Rana, economist Asia Pacific at S&P Global Ratings, is with us now. Vishruth, thank you so much for joining us on the show this morning. So we've got that note, quite interesting, because it's not just India, but you see more growth ahead in China as well. Just explain the thesis, because we still haven't seen the final word and the ink dry on the actual tariff. What is it that you're baking in your estimates when you increase GDP estimates for both India and China?
Yeah, thank you so much for having me on the program. It's always a pleasure. And indeed, in these volatile times, I think a forecast is always going to come with a wider band of uncertainty as the economic environment remains highly uncertain. But as you pointed out, one key swing factor turns out to be the tariffs and what we assume going forward for the trade environment. We currently believe that the Liberation Day tariffs that happened in the early part of May are unlikely to happen again, in the sense that we expect that the current 10% baseline tariffs that the US has in place are going to remain through the forecast horizon. In our assumptions, we assume that the US effective tariff rate will be at 15%, which is roughly the current level through our horizon. So that is one of the big drivers behind our upward revision in the region compared to our May forecast, when trade was highly more volatile and looking much darker at that time.
So what does this mean for, let's talk China, because when we're talking tariffs, obviously they stand to get impacted more. So you're saying effective final tariff for US at 15%. What about the tariffs on China? Because from 145%, then there was significant climb down. And exactly what are you expecting? A bigger uptake in China? What will drive it?
Yeah. No, that's a great question. So the 15% effective was on the global, from the US to the global.
From the US side, yeah.
Right. But for China, the level is closer to 40% in our estimate. So we estimate the US effective tariffs on China are roughly 40%, which is very steep. There is some diversion going on in the sense that Chinese exports are going to elsewhere, to Southeast Asia, to Europe, before going onward to the United States. So part of that is happening. But of course, the bilateral trade between the two has climbed down quite sharply. But what does all of that mean for the Chinese economy overall? One, it means that there is a more adverse external environment, and that is baked into our forecast, which is one reason why we don't think that growth will hit the 5% target that China has in place at the moment. On the other hand, the more important part for China this year is how the domestic story plays out. So there, the property sector currently still looking a little bit adverse there in China at the moment. Consumer sentiment relatively cautious despite some stimulus measures. Overall, the domestic economy is holding up a bit better than the external environment, which is leading us to revise our forecast higher, but still well short of the 5% target that the government has in place.
Okay, so now let's talk about India. The small increase in the forecast here, 6.5%. So what made you do that? Does it have to do with the easier monetary stance of the RBI? Your thoughts?
So definitely, I think one element to the forecast is this front loading of rate cuts that the central bank has engaged in. And we think that it will lift consumer sentiment, should lift credit growth in the economy as well, which has been slowing for several months. On the other hand, the RBI did move to a neutral stance, which means that there's limited further room for cuts over the horizon. We think about 25 basis points of further cuts coming up this fiscal. Overall, the growth environment for the domestic side of the economy has held up slightly better, which is the main factor driving up our forecast for the year. In terms of the trade and tariff environment, I think India, one sheltering part for the economy is that it is more services oriented, both in terms of trade as well as domestic activity. And the service sectors have so far largely been exempt from the tariffs and trade tensions, which is going to be a positive factor this year.
Okay. So, Vishrut, otherwise, I mean, how do you size up the overall macros here in India? Growth, you're saying 6.5%. The hope is that inflation will remain under control. I mean, the last print was below 3%. And now with the oil prices again stabilizing, how do you see the next couple of months play out here?
Yeah, there's a couple of key factors, I think, on the inflation outlook. The first thing is food prices, of course, which is the key for India. And with the Met Department forecasting above normal monsoons, that should bode well for agricultural produce. And that means food prices should be relatively contained through the rest of the year. Indeed, we think that inflation is likely to come in just at the 4% mark for this fiscal year. helped by the lower food prices. The outlook for energy prices is key. In India, of course, the producers bear some of the costs of that energy price volatility. Some of that is smooth before going to consumers. However, we think that energy prices for now are likely to remain range-bound, despite the recent increase in geopolitical uncertainty. And this means that energy price inflation should be relatively capped. I think one key swing factor to point out is the core prices and the prices of gold, which are currently playing into the inflation outlook. But for now, this remains relatively contained. We're not overly concerned.
Okay. All right, Vishruth, we will leave it on that note then for today. Thank you very much for joining in. Appreciate you taking out the time. With that, we're going to wind down on this edition of Bazaar. We're leaving the markets in steady form, 160 points up on the Nifty. The Nifty is actually doing better than the mid-cap index right now. Bank Nifty for the time being, also notching up gains of a little over 0.25%. So steady start to the day. We'll take your leave on this note, but do stay tuned. All the action continues. Up next is Chartbusters.